What's going on, guys? How are you? How are you doing? Welcome back to ShocksCapital YouTube channel. Today, I want to show you how to start trading with 50 bucks, right? So what you need to do here is very simple. I'm going to show you a strategy that you can use, and the reason why I'm choosing this strategy for you to use with less than 50 bucks to trade is because of the low stop losses that are needed in trading this. So this is very good for growing small accounts. If you have a small account and you want to grow it, this is something for you. And buckle up as we go with this. So let me just go right into it, right? When you want to be trading with less than 50 bucks on volatilities. So these are derivative volatilities, right? We have derivative volatilities and we have well trade volatilities. If you want to trade any of those, the links are in the description down below. It doesn't matter what you are trading, you can use this same strategy in trading all the volatilities, right? If you want to trade derivative, the links are in the description down below. If you want to trade well trade, same applies, right? So let's just go right into it. If you are trading this, you need to understand that you don't need a lot of things to actually trade this. You need the M1 and you need the pair that you're trading. And here I'm using volatility 75 as an example. And if you are to get an account on World Trade, you can use this on FX Vol 99, right? So that's out of the way. Let's just look at this. So number one, you want to see price breaking through a high if you want to sell, right? When you want to buy, you want to see price breaking through a low, right? So when price breaks through these particular highs that you see here by this, so this is what is called a stop hand, right? When price breaks through this particular one, we say that price is hunting stops above this particular this particular high. All right, and you want to see price changing directions and going to the other side and breaking a low. When price then breaks a low at this particular zone, you want to identify an order block in the other direction. Then you want to be trading off that particular order block. The order block has to be above the break of structure. So this is the break of structure, which means that the order block has to be above, and this is the order block. When price retraces back to this particular order block and retests that particular order block, that is your trade. And you are going to be looking at that, and you are going to be trading here, and your stop loss is going to go above that particular trade. You are going to be doing all this on the M1 time frame. Remember, what happens on the H4, D1, H1, M15, M30, all is coming from the what? From the M1. So if you understand structure and liquidity from the M1, it means that you are going to understand everything that has to do with your trading on the M1, and this is how you are going to be doing it. So number one, liquidity grab, which is stop hand. Then number two, break of structure. As you see, number four, you're going to be looking at a retest and the order block, right? This is what you are seeing here, and this is how you're going to be trading this. It does not matter if you're trading derivative or you're trading world trade, right? Everything that you have to do, you are going to be doing using this particular method. You break a low right here, break a low, right? When breaks a low and goes up and breaks a high, like what you are seeing here, it means that we are well suited for a what? For a buy. When price comes back to retest this particular this particular order block, price goes up. And this is what you are doing. Very simple like that. You are just looking for vents, and you are just looking for what? For setups that conform to what we are going to be saying, or to what we are actually saying on this particular on this particular pair, right? So this is how price is doing. Number one, it has to break a it has to break a low, right? Or a high. And you know what to do. It breaks a high here. When it breaks a high, we know that when price breaks a high, we want to be selling. And what do? We break this particular low, right? And after breaking that particular low, what are we going to do? We are going to be looking at this as a as our order block, and we're going to be trading off this order block, and you're going to be targeting the next the next low, as you see from this particular from this particular zone. This is how we are going to be doing it, and this is how price is actually going to look like. After that, what are we going to do? We have a low, right? We have this particular low. After that particular low, what are we having? We are having a an order block or a fair value gap in this particular zone. And after that, price is actually taken out this particular this particular high or this high, and this is the fair value gap that you are going to be using. So this is what you are just looking for you're just going to be looking for peak formation highs on the on the M1, and you're going to be trading off that. If you can read structure on the H4, you can actually absolutely read structure on the M1. Simple as this, break structure right here. All right, this is the break of structure. And where is your order block? Your order block is up there, right? Your order block is up there. This is what you are going to be trading from the order block, and price just goes away like that. So this is how you are going to be trading, right? Break structure, goes up, break structure at this particular zone, and this is your order block. I want you to see that number one, we break a low, right? This is the stop hand. Number one, you're looking for your stop hand. This is the stop hand, and price goes away and breaks a what? Breaks another high. This is the break of structure. After break of structure, you're going to be looking at this as your what? As your order block, because after break of structure, you're looking for the last order block, and this is the last order block. As you see price going up, and this is the what? This is the high that you're going to be using as your what? As your take profit. You don't need to be greedy. In 5 minutes, you should have made your money and you're matching out, right? You have a small account. This is the way to grow a small account, and this is the way to do it, right? Number one, price goes above a high, a high. When price goes above a high, it means that price is now what? Is now looking to break a what? A low. When price now breaks a low, what are you looking for? You are looking for price to come back and retest a particular what? A particular order block. And in this case, what order block? This order block. But in this case, price did not come back to retest the order block. So these are some of the trades that you're going to be missing, and it's fine. Absolutely fine. And you see here a high, then price goes above, breaks a low. When price breaks a low, it means that you are waiting for a what? You're waiting for a retest. This is the low that price breaks, and that is break of structure, right? You are waiting for a retest of an order block. You see that 1, 2, 3, 4, 5, 6, and in 10 minutes you are out. You have grown your account in that particular zone, right? This is what you need. So if you are using this strategy, right, you need to understand that you need to break your account into what? Into 10 parts, right? If you have a $50 account, break it into 10, which is 5, 5, 5, 5, 5, 5. And you understand the strategy. You need to be risking $5 on every particular trade that you are going to take, be it on well trade, whose links are in the description down below. If you want to partake in that, it means that if you risk 5, 5, 5, 5, 5 for 10 times, you are going to be winning. Maybe you are going to be winning 5 trades. When you win 5 trades, 5, 5, 5, and you are looking at what? And you are looking at 1 to 1 in 3 risk to reward ratio. When you win 5 at 15, you are going to be making $75, and you lose 5, you are going to be losing $50, and that means you have a profit of 25. From 50, you have 75, and you would have made profit. You would have grown your account. If you continue doing that, you will grow your account until you stop growing your account and you start actually trading. You start actually making money. You see what we are doing here? You see what you are doing here? Without saying a thing, you should understand what we are actually doing, right? You should understand what we are actually doing. You break this particular zone. This is the low. This is the first protocol. Price breaks. This is the stop hand, right? This is the stop hand. Price goes away, breaks a high. When price breaks a high, goes up here, comes back and retests this particular order block, goes away. So you're just following price. It will seem like you are a magician, because you're just following what price is doing, and you are just following how price action is moving, and you are just looking at price and taking your decisions based on what price is doing. If you look at this particular zone, what are you seeing? You see price breaking above the what? Above the high. Price breaks above the high. What is price doing? Price is actually going to break below the what? Below the high. So price breaks here, as you can see. What are you doing next? What you're going to be doing next is to look for a fair value gap or an order block. Look, this is what price is doing. Retests and goes away. A very, very easy trade that you could have taken in your sleep. So this is what we are doing, guys. I hope to see you in the next video. This is what I wanted to show you. And remember, if you are not yet on World Trade and you trade synthetic indices, you are missing out. So what you need to do right now is to get in the description down below, get that link, click that link, and get a Syntex account. Remember, you do not get a pro account if you want to trade synthetic indices, right? You go there and you get a what? A Syntex account. After getting a Syntex account, that will be your volatilities account, and you can actually trade this on what? On MT5, and you can trade these indices that ranges from 499 to actually game paying you owe all that nice stuff. So if you are not yet on World Trade, this is the moment, this is your time, this is your sign to actually get in on there, get your 50 bucks in and start trading like a boss. I will see you in the next video. This has been Shocks and I'm out.